The markets are wide open for REITs. Their debt is executing at attractive pricing with very attractive spreads to the 10-year Treasury. So we think that ability to have dry powder in the form of well-managed balance sheets and the ability to get financing and raise equity quickly when there are growth opportunities is something that's going to really be critical and a real positive for REITs in 2025 in terms of finding growth opportunities.
Hello and welcome to the REIT Report. I'm your host, Sarah Paulson-Keto. Joining me today is my colleague, John Worth, Nareit's Head of Research and Investor Outreach. John's here to review some of the key points of Nareit's 2025 REIT Outlook, which is now available on REIT.com. John, welcome to the podcast.
Thanks, Sarah. Great to be back.
John, how would you describe the economic backdrop that REITs were operating in during 2024? And what do you see as key potential drivers for REIT and CRE performance in the coming year?
Thanks, Sarah. I think one of the keys for REIT performance in 2024 was really the degree to which the REIT returns were macro-driven. And by that, I mean they were really driven by the rate environment, which is in some ways out of the REIT's control and less driven by REIT's operating fundamentals. And obviously, we're going through a period of monetary policy adjustment. We've seen rates come down. We saw a slight resurgence. They've come down again. Our expectation is as we get into 2025, we think that there's a very good chance that the Fed will have successfully executed a soft landing, that we'll see lower rates, more moderating monetary policy, and continued economic growth. And we think that's an environment, particularly as we get to the point where commercial real estate transactions start ticking up again in this environment. We think this is an environment that can be very positive for REITs and can be really an environment that helps support REIT growth.
So how would you say REITs are really positioned to react to this potential revival in the commercial real estate market?
REITs really have a couple of characteristics that we think make them unique. And those characteristics, I think, are always unique and always drivers of performance within REITs. But right now, I think they can be particularly valuable. The first is that REITs have really managed their balance sheets. So they've come through this period of higher interest rates with balance sheets still very solid, very conservatively controlled. So leverage ratios are low. They're sitting right now just above 30%. The weighted average term to maturity of the debt they do hold is still about 6.5 years. And fixed rate debt is accounting for more than 90% of the debt on REIT balance sheets. And unsecured debt that has been placed in corporate debt markets accounts for nearly 80% of REIT's total debt. And we think that access to capital markets is going to be critical in 2025, as some potential buyers and participants in the commercial real estate market are still going to be struggling with a bank financing market that, while it's improved a bit, continues to be difficult to find bank financing for commercial real estate. REITs having ready access to both unsecured debt markets as well as the ability to issue equity. And what we saw in 2023 and 2024 was that REITs, when they had opportunities, were willing and able to tap those markets very successfully. The markets are wide open for REITs. Their debt is executing at attractive pricing with very attractive spreads to the 10-year Treasury. So we think that ability to have dry powder in the form of well-managed balance sheets and the ability to get financing and raise equity quickly when there are growth opportunities is something that's going to really be critical and a real positive for REITs in 2025 in terms of finding growth opportunities.
And John, are there any sectors that you think will be more active than others?
We've certainly seen discussion of to the degree to which a sector is trading above its net asset value. Typically, we think they're going to be more aggressive. Certainly, we assume there's going to be a lot of development in the data center space as that sector continues to have real tailwinds. But I wouldn't be surprised to see these kind of opportunities across all the sectors, because it's really the same story playing out across sectors.
And Nareit's Outlook also looks at the global REIT evolution and outlines 4 key megatrends. What do those trends say about the REIT industry, and how will they shape it going forward?
Yeah, and this is something where we've really thinking about globally what has been happening and what has been driving the evolution of the listed real estate space across the last 10 years and thinking about what we think is going to be most important in the next 10 years. We've come up with these four, what we call megatrends, which are specialization. That's really being a pure play company that focuses on and becomes a world-class operator in a particular property sector. Scale, that's getting large enough and having the operating platform to be able to execute at scale and to raise capital at scale. Then innovation, this can mean entering into new property sectors. Obviously, REITs have been at the leading edge of innovation by property sector, including data centers, cell phone towers, over the years, healthcare, self-storage, gaming. The list of property sectors that the REITs have really brought into the institutional spaces is quite long. And then the final megatrend is sustainability. And I would say that when we think about those four critical components, all four of them are areas where REITs are really poised and have the real ability to execute on them. Obviously, specialization is something that U.S. REITs have really focused on today. About 97% of the U.S. REIT index is comprised of pure play REITs. Obviously, we've seen a growth in scale in the U.S. as we've seen the largest REITs get larger through acquisitions and build out their operating platforms very successfully. And that innovation, I think, has been central to the REIT story in the U.S. And sustainability, one of the things we see is that REITs are really some of the sustainability leaders in the real estate space, something that probably isn't recognized as much as it should be.
Great. And during 2024, we saw how REITs can play an important role in portfolio completion strategies for institutional investors. Do you expect to see more activity on that front, both in the US and globally in 2025?
I definitely do. And I think a lot of it is really linked to these four megatrends we just discussed, where I think institutional investors are realizing that for many of them, their property portfolios do not span the breadth of what commercial real estate is today. Then they have a property portfolio that looks very much like commercial real estate looked 20 years ago, which means it looks like the economy looked like 20 years ago. Obviously, we've seen rapid change, incredible growth in the digitization of economies, as well as more use of healthcare, change in consumer preferences. So one of the case studies that we go through show how institutional investors have successfully used REITs to get access to whether it's property sectors, geographies, tactical opportunities, really whatever they feel is missing from their real estate portfolio or whatever goals they want to achieve in their portfolio. REITs have been shown to be a really nimble set of tools to meet those objectives. And I think we'll see more of that. The most obvious case, I think, is today getting access to some of the newer property sectors. But we also see the same thing playing out in terms of use of REITs to get access to geographies. We think we'll see investors using REITs to get access to world-class sustainability performance. And of course, we see REITs being used to try to behave tactically with respect to public and private real estate when those valuations are out of sync.
John, where do you see the greatest opportunities and potential challenges for the REIT industry in 2025?
I think the opportunities are really twofold. One is this ability to really find smart opportunities for growth in a period when REITs have, in some ways, a very unique access to capital through their access to unsecured debt markets and the ability to issue equity. I think there's also tremendous opportunities for the REIT model to be used and used really effectively, both by U.S. pensions as well as globally by both pensions and sovereign wealth funds in terms of pairing public and private real estate in really smart and effective ways, the way some of our case studies show. I think in terms of risks, I think it really comes down to whether our forecast, which is for a good soft landing in terms of pretty robust economic growth while we see rates under control. I think the biggest risk to the outlook is in fact, the risk to the macroeconomy.
John, finally, any closing thoughts on the outlook and the picture that it's presenting?
I think the number one closing thought is that I hope people take the opportunity to give it a read. There's a lot in there. We've just scratched the surface. It's something that the Nareit research and investor outreach team, we have a lot of fun putting it together. We think there's a lot of interesting insights in there, and we encourage people to give it a read.
And just to remind listeners, that's available on REIT.com. John, thanks so much for your time today.
Thanks, Sarah.
And to our listeners, to ensure that you're receiving every episode of the REIT Report in 2025, be sure to subscribe on your favorite podcast platform.